and welcome to the stock-specific class here for Thursday, March the 16th. I'm hoping I can get through this. I haven't been talking much all day, trying to save my voice for this hour. I'm going to try to probably speed things up a little bit so I can make sure I get through it, but we're still pushing forward here. If you have any questions during the week or any questions that I don't get to here in the live class, make sure you send those to Jerry, Jerry, at TradersPro.com. I'll be happy to answer those for you. Also, if there's any audio issues, aside from my voice sounding terrible, let me know. I can try to dial back in and fix those for you. So just make sure you let me know if there's any clicking or anything like that on the audio. All right. Obviously, the market rallying a little bit today. That's not surprising. The market is getting a little bit oversold. We had talked about this on Tuesday, and personally, I've been trading the market to the downside. I don't like to short stocks, but I do like to use put options. And what I've been wanting for put option trades is to get a little bit of a relief rally here, alleviate a little bit of that oversold market condition to set up for a possible another move down. We'll look at the charts today and I'll show you kind of what's going through my mind. But, one thing I pointed out on Tuesday when we were talking about the whole bank thing, and I don't really want to just rehash everything I talked about on Tuesday, mostly just to save my voice. But remember what I said, as I said, this isn't likely to resolve itself immediately. And we're hearing these things that are coming out, is the Fed going to do this? Or just in the last hour or two, there was news that some of the big banks, Goldman Sachs, and I don't know who else was involved. I heard Goldman Sachs was one of them, deposited some money in First Security. Didn't bail them out or anything. They just put uninsured funds in the bank just to show confidence that the bank is going to be fine and make sure people aren't rushing to pull their money out. Again, it doesn't fix anything. It's all it's trying to address is the psychological problem and we talked about on Tuesday how this can spiral out of control. It can nobody wants to be the one that isn't able to get their money out because they waited too long and they trusted too many people. And I'll tell you this right now, and I don't want to say this to try to trigger any sort of scare, especially if you have an account in one of those banks. But if you're trusting the big banking system in this country, if you're keeping your money in the account because Goldman Sachs is putting money into a bank, I don't know. I'm telling you right now, I don't trust these guys, any of them. I've got accounts with some of these banks, but I don't trust a lot of anything on Wall Street for that matter. Everyone's out for themselves. You have to realize that, and nobody's doing anything for your good. They're doing it for their good. And if they deposit this money into that bank, there's probably an agreement that if things get worse, they're going to be able to get their money out before everyone else, or they're getting paid some unusual interest rate on that money that nobody else is getting. There's some sort of deal going. They're not doing this out of the goodness of their heart. I'm telling you that right now. These guys are sharks. There's nothing, there's nothing, they're not doing anything out of the kindness of their heart or to support the little guy out there. Now, again, I don't mean to go into that little rant, to say that there's not goodness in the world. There definitely is, but you're not going to find it on Wall Street, or at least it's going to be very difficult to find it on Wall Street. And if you're looking for it on Wall Street, it's like sticking your hand in the water when a shark is nearby, hoping that it's not going to bite your hand off. Eventually, it probably will. When it gets hungry enough, it will. But anyway, having said all that, the key thing I want you to understand is that this is likely to still be a problem for a little while. And it's likely to feel like it's going away and then come back again. I talked about on that Bear Stearns example where everyone said that's an isolated case. They dealt with it. It seemed like it was fine for a few months, and then bam, we got hit with it again in the fall. You know, the what's going on right now is all these banks that were doing the same thing, and there's a ton of them that were probably doing the exact same thing, are now scrambling to make sure that nobody finds out that the water's going, the tide's going back out, and they don't have their swimsuit on. You know, there's bound to be. This is usually just the tip of the iceberg, and it's just been my experience that that's usually the case. Now, I could be wrong, and if I am, then maybe we do take off. And by the way, I'm going to go off of what the chart shows me. If suddenly we take off in a nice uptrend and all this bearish looking price action and charts change, then I'll change with it. I'm not digging in and trying to make bold predictions to be right out there. I'm going to follow whatever the price action the chart tells me to do. All right, so direction alerts here. Not much has changed with the rally, though. We had a little bit of a rally that's caused the indicator to come off that oversold extreme. Now, what does this mean? It just means, and it'll probably move a little bit further to the right if the market remains or it keeps rallying today. Because remember, these update overnight or after the market closes. They update that current day's data. So we have alleviated a little bit of that oversold condition, but the market's still pretty oversold. What this does say, though, is that it could be, with this little relief rally, it could be setting up for another move down. It could move lower in a condition like this where it's alleviated that extreme oversold condition. But it could also mean that the market's going to stabilize. And it could launch into a nice rally from here. I'm going to show you a couple of scenarios there, a bearish and bullish scenario, what to look for here in just a second. Same with breadth. Breadth is still in the extreme, but it's over in the right side of the midpoint, and it'll probably move into the high range today when it updates. So it'll probably back out of that extreme range. Again, we're still pretty oversold. I'll show you a couple other indicators that are still showing pretty oversold. Sentiment still ridiculously high. Buy-sell ratios, they're still showing a pretty extreme condition. A lot more sells than buys. We're reaching a pretty extreme range there. This other sentiment indicator is off, kind of similar to the others, is off the lows there, but still pretty close to that extreme. It wouldn't take much of a move down to put it right back in that area again. Probably the biggest thing that tells us that we're really still pretty oversold is when you look at the buy-sell ratios of all the different market indexes, you can see right here we're very, very low ratios. NASDAQ 100, there's only 4 stocks with buy signals, 57 with sell signals. The Russell 2000, only 59 buys to 945 sells. That's a pretty extreme condition. I have seen it get worse than that. But again, that's the thing. That's why you never want to base a trade on just is the market overbought or oversold, because it can stay overbought or oversold for a while, or for a little while, or fluctuate between that range for a little while. But it is important to understand the condition you're in. I don't want to be shorting heavily when the market is this oversold. I also don't want to be buying heavily yet. Whenever you get to either of these extremes, you want to start to exercise caution. You want to reduce risk exposure, because what also follows these conditions are when you're in an extremely oversold condition, um, you're the typically the trading crowd is a little bit more bearish. Um, when the market gets too bearish, that's usually when it reverses back into bullish. When it gets too overbought, the market tends to get too bullish. And so you have to fight that a little bit, because it's going to feel, when you're in this overbought condition, it's going to feel like you should do more buying. You should aggressively do more buying because everyone else is buying. Everyone else is feeling the same way you are. And you get caught up in that, and you get overconfident. And but if you have an indicator like this that says, hey, this is warning me, the warning lights are going on, we're getting, then again, not just entering into this extreme range, but when you get to the far right side of it, you got to realize that, okay, you might be getting caught up in that excessive bullish behavior. Maybe you start tightening up stops, taking some profits off the table, reducing the amount of trades that you have at risk, or just different defensive things that you start to do in those conditions. Over here, we can start to add a few stocks that are performing pretty well despite the bearish conditions. And that's kind of the point of this class, is to look at some potential stocks that are still looking pretty good despite more of the bearish conditions. But because the condition is still more bearish and there still could be more downside, you don't want to get too aggressive. I've only got one stock in the portfolio right now, and I'll probably keep it that way for a little while here, until I'll show you when we get to the chart what I'm kind of looking for. Question: is it 2008 again? I don't think it's going to be 2008 again. Now, you probably always tend to feel that way in the beginning of some of these things, that you kind of hope. Part of you is hoping that it's not going to be that bad. It definitely has the potential to spiral, but there are different conditions. We came out of an area. The 2008 there was so much just stupidity in what was going on in the housing market. People that didn't even have jobs, had terrible credit scores, were getting as much as they wanted for big houses or what have you. It was pretty bad. And so I don't see the same situation. But usually this is a good sign that we're seeing this, because usually when you get to the end of a bear market, in almost every bear market, you go back and look in history, what you start to have happen at the end of bear markets is the corruption starts to get unraveled. And the fraud starts to show up. And now I'm not saying that doesn't happen all the time anyway, that there are fraudulent things going on in the world and crooks out there and things like that. But you start to see more of it. You start to see these schemes get revealed, and you find out that a lot of people were doing it. You thought it was isolated. It was only this one company. You find out, boy, no, people talk, and people people share what they're doing to screw other people over sometimes, and it starts to expand, especially if it's real easy, or seems to be easy. So these things start to come out, and that's why when this whole thing came out last week, or really started to come out last week, it really perked me up, because it's like, okay, this is number one, this is something that could lead to the panic sell-off that I'm still looking for. But it's also another sign of what you tend to see at market bottoms, as you see a lot of this stuff take place. Back in 2008, it was the credit default swaps and banks were doing, because they felt like there was absolutely no risk of those AAA, or those mortgages, those really good mortgages going under. They were, they're letting people buy as many of those as they wanted to buy. thinking that the risk was zero, and then suddenly the risk was huge and it, like I said, almost collapsed everything. So anyway, I don't think it's exactly the same, but what the biggest thing that I learned back then is to be very careful who you're listening to in these types of market conditions. Number one, don't believe everything you see on TV and people that are talking on TV. A lot of these people on CNBC and Fox Business Channel and all that, they either have accounts themselves that they're running, or they know people that are their buddies with that have accounts, and I'm telling you, there are things that they will talk about on there that may not be in your best interest. They may know a fund or the market is in bad condition, but their buddy needs it to hold up to get out of his position and lose as less amount as possible. And they'll go on there telling you to buy stocks or that the market's fine. And usually you can tell when some of this is happening, because especially that's why I love reading charts, because the charts and the price action isn't showing that. But they're coming out saying to buy, and they're not giving great arguments. The only great argument is, well, this is still a quality company and it's not going to be down forever. They don't always have sound arguments for what they're recommending. And I just learned early on, and if I could bottom line this, I just learned, and it's maybe a cynical way to approach this, and I don't like to be a cynical person, but you kind of have to be when you've seen what's gone on Wall Street over the years. But whenever anyone wants me to do something, I always ask myself, why? Why are they doing this? Are they doing this to help me, or are they doing this to help themselves? And if you just simply ask that question, what it forces you to do is observe their motives. Think about yourself. What do you do on a daily basis? Do you go out of your way would you go out of your way to make sure your neighbor didn't lose his house? You go help him pay his mortgage payment. Meanwhile, you're not able to pay yours and your house goes under. Are you really willing to do that? Well, probably not. I mean, most of us are, whether we admit it or not, are really centered in self-interest. We do things that, are charitable or for other people. But even then, some of that has to do with self-interest. We want to look good in front of our friends when we're donating to a charity or something like that. So just understanding that human nature is really centered in self-interest is important, because if somebody's telling you to go buy a stock, why? Is it because it benefits you, or is it because it benefits them? And I don't have a problem if someone has that same scrutiny on me. Why am I recommending this stock in the stock specific class? Is it to benefit you, or is it to benefit me? I don't have a problem with someone questioning that. But what I try to do in these classes is show you why I like it, and to teach you to be able to recognize those same things, so you don't have to rely on me and what my opinion is or what I think you should do. But you can make that decision yourself. And the more you can make the decision yourself, and you're relying less on other people out there, man, you're going to avoid a lot of crooked people. And I'll tell you, I'm the worst person. If you're a salesman, I'm the worst person to talk to, because I don't buddy up with salesmen. I listen to every word they say, and I question everything they're asking me to do. And when something seems too good to be true, I start trying to find out how they're going to screw me instead of grabbing that what seems too good to be true. And it served me well. I've avoided a lot of pain, I think, in life because of that. All right, off my soapbox here. Here I am trying to save my voice, and I'm going off on these tangents. Let's look at the SPY. Obviously rallying a little bit today. Obviously rallying a little bit all week off the bottom down here. This is kind of looking to me, though, like a little bit of a bearish ABC pattern right here. Now, it doesn't mean it is. And it could be, just like I was saying, that this could look like a bullish ABC pattern, but it could still have a lot further. It could just be starting a bigger move down. The Same thing here. This could be the start of, this could be wave 1, wave 2, wave 3, 4, 5 of the move up. So what I'm going to do, well, there's a near-term area I'm really focused on right now over the next couple days. One is I'm looking at 395. We're right at it right now, but I wrote this down on my, here you can see it even right here on my other charting service. So I've got this green line, 395. If the market moves above that, I'm going to be bullish on it till up to here. If it drops below 385, I'm going to be bearish on it, boy, at least down into here, maybe even, I mean, that could be leading to a much bigger drop after that. So this is my, and it's basically what we've been trading in all day. We opened, closed down there. We're up around here. So tomorrow could be a critical day for that. Now this is a pretty strong candle. You know, I wouldn't expect tomorrow that you'd see an immediate drop off of that. If that's a bearish ABC pattern, what I would probably look for is something like this, a bearish reversal candle. That's a shooting star candlestick formation. It opened higher, a gap up, rallied up to here, and then faded into the close. Or it could just be an indecision candle, but it usually involves gapping up at the open. And who knows, we're fading a little bit off the highs here. We could come all the way back down. This candle could look a lot different at the end of the day, but you know, on the real strong days, you don't usually get a drop the very next day. You'll get some sort of indecision candle or pause or reversal signal, and it may not do that. It may blast through, and then that would say, okay, we're probably more likely to work our way back up to this high up here. Now, let me go back to the other chart here. One of the things I talked about on Tuesday was if the market does start to rally, you know, I said sometimes these things you'll get the initial shock, and then it'll look like it's gone away, and the market will look like it's shaking it off, and it'll come back again. One thing I pointed out is it could be that this is a, you know, I've been talking about this as being a bearish ABC pattern right here that we've started to move down. The more we come up, though, the more you have to consider a more bullish possibility. And sometimes on these corrective moves, there'll be these double corrections where it'll just look really choppy, and that could put us where we rally up into here, near this high right up in here. This would still look very corrective and still look like it's setting up for an impulsive move down. Typically, bullish trends don't start out this way. They tend to start off more impulsive looking. This is very corrective looking so far. But that would, if we did rally for a month or two or something like that, that would be the area I would expect to maybe get up to. And who knows, maybe it could even get up that far. That's why I'd look at some of these other breakout areas as key areas to watch. So this area right here would be, you know, that would be an area to watch. This would be an area to watch up here. And then that last area would be right up in here. Yeah, another thing too to keep an eye on is that we're also, if you look at this move down, we're also a little bit above that 50% retracement level, probably pretty close to that 618 retracement level. If we're going to reverse and go down, this is the area where we're likely to do that. We start to get up in this area right here, it becomes less likely that it's going to go down, more likely it's going to go up. The probabilities start to shift. So again, these are real subtle things that what you want to do with some of these things I'm teaching is to learn them and then learn them, get to the point where they become automatic, where, a lot of times I'm not thinking this when it gets up in this area right here. I'm not thinking, oh, that's a deep retracement. I'm thinking, my mind just says that doesn't look right. That doesn't look that's starting to look more bullish than bearish. And when you get to that point, I don't need to look at a chart for more than 2 seconds to see whether it looks bullish or looks bearish. And then if it does look bullish, I can spend more time in analyzing why it looks more bullish or bearish. But what happens with a lot of my chart analysis is that you do it enough over the years, and you study it enough, and you work hard enough, it just becomes, it doesn't look right, or it looks great, or it doesn't look great. And that is so valuable when you get to that point where just looking within a second or two, you can tell whether a chart looks good or not. It just saves you a lot of time, and frankly, it puts you in a lot better stocks to trade, because a certain pattern has a higher probability of working out than a different pattern, and that's what we're trying to do. We can't know exactly what these stocks are going to do, but if we can get enough of these things lining up in our favor, probabilities lining up, or at least trying to be on the right side of the probabilities as much as we can, then we're going to be all right. I just got a comment here that someone couldn't hear me. Well, if they can't hear me, I can't really tell them. If anything happens where it seems like the audio is out, it's hard to know if it's on your end or my end, but you can always try to dial back into the audio, and that might just be the problem, because that's the only person that said they can't hear me. So I'm assuming it's just on their end that the problem is there. Anyway, so hopefully it's not everybody. Hopefully I haven't been talking to myself for the last 10 minutes. All right. So anyway, that's what I'm looking at on the S&P. The way this is looking so far, though, it's looking very choppy back and forth. This looks impulsive. So far, this is looking corrective. This is looking more choppy back and forth. And also keep in mind that a lot of times you get these really strong rally days within the downtrend. It's almost like the market tries to suck some people in, especially when it's combined with news item that people may feel like the worst is over. They solved the problem. I can jump back in now, or a lot with what's happening with a lot of these bank stocks is they're looking at what is it? What is the hold on? It's FRC. I'm trying to remember they're looking at some of these First Republic Bank. You see how far a bank like this has dropped. This is a $119 stock just a few days ago. It's down at $20, $30. And you think, okay, if they solve the problem, it's going to go all the way back up to $100. So you buy right here. The greed kicks in. I'm going to make a killing. I'm going to retire on this. Trust me when I say this, that if it feels like you're going to have a guaranteed winner, this is going to go right back up to those levels. It's probably not. It'll shake you out somehow. Maybe what it does is it rallies up a little bit. It gets you feeling really confident, and you're saying, boy, I have a nice gain, but I'm going to get all the way up here. And then it really drops, and then you freak out, and you're selling down here, because now you're just trying to hold on to what you got. Usually at bottoms, let me just tell you that usually the behavior at market bottoms is that you don't feel like buying. It doesn't feel safe to buy. This still feels like it feels safe to buy, because again, you get this news that Goldman Sachs is putting their money in there. Well, then they're fine, and if they're fine, this thing is going to go right back. Why won't it go right back to where it was? The market is never going to give you that type of a gift. That's especially when there's probably 50 million people who are thinking the exact same thing, right? Um, and so all I'm telling you is if you think that and you went and bought that thinking that, the market's going to do something to try to shake at least most of you out of that trade. I don't know what it'll be, but that's just what happens. The only time it'll work where you get in at the bottom and it goes all the way up is when it just is ugly. Nobody wants it, like Bitcoin was a couple months ago, where man, it was like it did not feel safe to buy Bitcoin. It looked like it could, you know, it could. Well, some of the cryptocurrencies were going under; they were going belly up, and it looked like there's that possibility that could happen. You'd be too afraid to put your money at risk right there. That's when you know you're at the bottom, and that's what you'd have to fight to get in. You're almost having to buy and say, oh, I don't even watch this. I can't watch this because it doesn't feel right. That means you probably got in at the bottom. That was probably a pretty good, well, it's either a good trade or that company's going to go under, but it's not going to feel safe to buy. So if you're buying today because it feels like, oh, okay, I can buy now, I'm telling you, the market's going to find a way to shake you out of that trade. I'm just telling you. All right, so let's move on to. I need to get to this because I want to get to this trades. But so basically, the S&P chart, we're in a little bit of an indecision area right here. We could go either way. I've marked the areas on the S&P where I would say, okay, so if we do break above that 395 area, you can look to add a few trades. Okay, maybe don't get crazy with adding to your, and make sure you have a clear stop loss. But it could be that we are more bullish over the next few weeks or so, and you could try to take advantage of that. If it drops back to below 385, you could consider those inverse ETFs, or just sit on the sidelines, stay with cash, and waiting for the market to bottom. The Dow, kind of a key area here we've been watching. First of all, it broke this trend line. We had a little bit of a wedge formation that broke below that. Then what I was looking at was this horizontal support. We broke below that. What could be happening here is we could be rallying back up to what used to be the floor, could be the ceiling. So, what does it look like when it gets up to here? Does it look like it's rolling over again, or does it break out back up above it? If it breaks out above it, that'd be more bullish. If it rolls over right here, that'd be very bearish. It probably means we're heading down. That's something I would look for in the Dow. NASDAQ's been outperforming all the other indexes. A lot of this money is going into big cap tech. Now, let me tell you what happens a lot of times in these big declines, because it's a pattern that happens over and over. I'm not saying it's going to happen here. I always have to. It may not happen this time, or may not happen exactly how in exactly the order or what have you. But a lot of times, what happens, there's initial scare in the system, and right now it's in anything financial is getting creamed right now. Right, all the banks. Even the big banks that seem perfectly fine, at least right now, are getting slammed. Insurance companies, anything related to finance right now, a lot of them are getting slammed. What's happening is the money is coming out of those stocks. Obviously, okay, money's coming out of that stock. Where is it going? Well, some of it's been going into bonds. We saw this jump in bonds. We'll look at the bond chart here in just a second. But as we've been able to see, a lot of it's been going into big cap tech and chip stocks. Some chip stocks, some of the chip stocks have actually started to roll over a little bit. But Google, Amazon, Facebook, or Meta. So, okay, so the money is going into there, and so what happens is that. So the money is going out of an area perceived as being risky into an area that seems more safe, but it's still, a good portion of it is still in the market, okay? So the first phase of these big professionals is to move it over into a safer area in the market. And then what happens is you get this disconnect, and that's what we're seeing. We're seeing the Russell 2000, which has the majority, I talked about this on Tuesday, majority of the stocks in the Russell 2000 are financial stocks, small regional banks. So it's gotten slammed really hard right here. And so we had days where the Russell was down and the NASDAQ 100 was up. Anytime you see that fractured market, it's usually a bearish sign, because it's usually a sign that the overall market is not healthy. Now, I'm not saying all these indexes move with each other the same way all the time, but usually when they're going in opposite directions, especially if that direction is pretty noticeable. There was a day where I think the NASDAQ 100 was up almost 1%, and the Russell 2000 was down like 2%. That's a major difference. If it's just a minor difference, mostly the market is flat and one index is up a little bit, the other's down a little bit. That's not overly bearish. That is indecisive. That tells you the market's maybe a little bit more indecisive that day. But when it's pretty noticeable, it's usually a bearish sign. It usually means that the professionals are taking their money from one area into another area. And it's kind of that first phase. And then the next phase is when what tends to happen is you get that shift. Let me go back to the S&P chart. You'll get a shift like that. It'll go into an area that's perceived to be safer. And then when the market rolls over again, then the next phase is out of everything. I'm getting out of everything. Nothing is safe. And you almost see you tend to see a huge flight into bonds at that point, or into just cash. But you just see, this is the indiscriminate selling that takes place on that next move down. So what I'm saying is if we rally from here, if we roll over again, the next move down will be the massive move down, because that's when the professionals say, I can't go anywhere, nowhere safe. I'm getting out of everything, and it usually, what causes them to get that way is that big drop. Like I said, you look for a Dow down 2,000 points or something like that. And I don't know what'll trigger it, but that's what you kind of look for. What you wake up one day and it's just, you're shocked. You're like, oh my gosh, I've never seen this before. That's when you know that it's we're in that panic phase or what have you. All right. So back to the Russell. Russell is showing a little bit of a rebound here, and it should. It's right at a little bit of a support area. But even then, this looks more corrective right here. And the key area is going to be this support. If it doesn't hold that support, look out, because especially since if it breaks this support, it's going to be right at those October lows very quickly. And that means if this gets to those October lows, it's likely the rest of the market is going to get to those October lows. Here's bonds. Now bonds, again, there was that flight into bonds this week, or last week and this week. Overall, the bond chart looks, longer term, it looks like it's looking more bullish. You look like you're kind of starting to move up the right side of the bowl. This area was critical. We did drop below it for that day, then came right back above it. So it could be that was just a little bit of an outlier day. You see it did break below it and then came right back above it there. But this is going to be important. If we break out above here, that's going to be bullish for bonds. Obviously, if we break down below here, it'd be bearish for bonds. We're kind of right in the middle right now. The fact that we came all the way back up here again, triple tops are pretty rare. So we've already tested this area twice. We're probably going to break out. I would lean more towards the bonds breaking out higher there. But I mean, they're down today, and it could be that they're working their way back down to this lower level. And there are charts where you can see triple tops. I'm not saying they can't happen. They're just pretty rare. So usually when you start moving up the third time, usually I expect it to break out at that point. By the way, this is the greatest 4 days of the year. Those of you college basketball fans, it's very hard to work on the first weekend of March Madness. It's just my favorite time. I just all I do is sit in front of the TV and watch games all day. So I don't have CNBC on right now. I'm watching basketball while I'm doing my update here. Not that I'm not watching the market. I've got charts in front of me. I can do both. All right, gold has been moving up. We talked about these on Tuesday. I want to get to the charts. Oil, though, let's talk about oil, because we did break below this support area right here, and this is exactly what I was worried about, is people assuming that just because the government was saying they were going to step in right here and buy to replenish the strategic petroleum reserve doesn't mean they will. They are going to benefit as a political party for lower oil prices. So I would strongly assume that they're kind of hoping that oil keeps dropping, and I don't think they're trying to help it hold up right there, because they'll benefit from lower oil prices, trying to buy back oil at lower levels as well. A lot of this is fears of recession coming up, but that's why I told you back here to watch this area, but don't just go buy oil stocks because we're down at this level. Because again, this seemed like the obvious trade that was announced out there. Everyone knew about it, and anytime everyone knows about it, it's probably the market's going to find a way to make sure not everyone profits from it. And this is exactly what happens. This is exactly what will probably happen if you're buying those bank stocks just because they're down big. The market will find a way to shake you out, so to speak, and I think that's what it's doing right now. All right, let's get to dollar. Dollar, we're just going to, above here is bullish, below here is bearish. We had this impulsive move down, and we came right back up. We're right in the middle. I don't know where it's going to go. It was looking like it's turning down right here, but it's right back up again. So I'm just going to say bullish above here. If it drops below here, I'm going to be more bearish on the dollar. And we'll see how that breaks out. Oh, we do need to talk about the VIX. VIX is back down. Again, this is still shocking to me that we have hit 30 twice. But remember, 30 is just the fear area. It's not even panic. And we're barely there. And we're right back into this area right here, which is probably concerned. And this is no concern down here. All this is going on, and again, it just baffles my mind that the market is just shaking this off like it's. Well, it just tells me we could be getting in a situation something really bad's about to happen, because the market just seems to be ignoring a lot of the stuff that's going on. And this is why I like the indicator, because this is not their opinions, or this is not where you're talking to them and they sound fearful or confident. Is how are you going to gauge that accurately? They could be trying to make you feel like they're confident or not. This is where they're actually buying protective puts or not buying protective puts. This is the marketplace telling you that they're by their actions, are they acting like they're concerned or not concerned? Now, again, you could flip that upside down and say, well, Jerry, they're the professionals. They're the ones that move the market. If they're not concerned, why should I be concerned? And that's true most of the time. Most of the time, I tend to think that way, that, if I see a move and the VIX is not spiking up, I say, well, they're not worried about it. But when the charts are getting this, the way things are setting up, where it's setting up it just has that feel of setting up for something big, that's what causes panic, is when the professionals aren't concerned and then suddenly they are. And it happens like a light switch. It isn't a gradual 2-week period where we're going to start to see that shift. It's going to be one day where it's like, all right, they're freaking out right now. And but there are signs that could lead up to that, where you know that the gasoline is on the fire and it's just waiting for the match. And yeah, we've got it's getting to feel like the gasoline's on the fire right now. All right. Under the new buys, I didn't have very many. In fact, I don't have very many overall, just because of the overall conditions have been kind of iffy. But I did like under the new buys, Clorox Company CLX 93 strength rank. An area to look at. Well, obviously, if we get a panic sell-off, everything's going to drop. It doesn't matter what you're holding. But if we don't, a safer sector right now would tend to be consumer staples, utilities. A lot of the big fund managers go into these areas. You're still going to be buying your Clorox wipes, whether we have a recession or not. You still got to clean things up. But now this is one I'd probably wait for a breakout too, as extra confirmation. But you've been kind of consolidating. It was nice to see, although we dipped a little bit below that breakout area. For the most part, this is why I don't look at exactness too. If you looked at exactness, you'd say, "Oh, well, Jerry, this broke below that breakout area twice." Yeah, but if you look at it as more of a support zone or area, it's held up. You had resistance here. You went a little bit above it here. You had supports a little bit below. You're pretty much you're finding support resistance in this zone. That's a good thing. And now you have an upper area right here. If you break out above that, that would tend to be more bullish. You can also draw a pretty decent uptrend line up through here. And we're still holding on to that. We still haven't dropped below that. And who knows, if I might have drawn the line. I can't draw a real straight line. That might have even lined up a little bit closer to that if I could draw a straight line. But wouldn't hurt to get that little bit of extra confirmation of breaking out. It is a little bit of an indecision candle today. And it could still be working its way back in this range, down in this range right here. All right, under construction, which is at the top of the list right here, I liked the one at the top here, AAON, 97 strength rank. The big long consolidation right through here, then broke out. It's come back down. Now it could come all the way back down to the breakout area. It doesn't have to though. And the reason why I'm not thinking that it will, well, it could if the market drops, but it had a nice bullish engulfing candle. Notice how it completely engulfed yesterday's candle. Open lower, it's trading higher. This looks like a little bit of an ABC, possible ABC correction here. Now, sometimes to deal with, I don't know if that's the bottom right there and it's going to go higher. You could just use that as your risk, a small risk right there. If I'm wrong, I only lose that amount. If you want to give it a little bit more room, you could probably get a stop down below that breakout area. Not right below it, but you could go down a little bit below it. You don't want to have it right below because you get where it dips down. And then, because a lot of professionals know that there's stops. They can see these levels like we can. And what will happen sometimes is the stock will be right down here. There'll be a clear support level, and that market maker knows that there's stops right down here. And he goes to lunch. He tells his associate traders, the ones that do all the work in the office, tell you what, if you can trigger however many stops you can trigger, you're going to get 20% of those profits or whatever, and it gives them an incentive. And so they'll try to move the price down to trigger these stops, and that's where you get stopped out and goes right back up again. So you usually try to avoid right below some of these areas, get a little bit further below it. There are times where I'll put it right at it though. If it's, if this thing broke out for instance, let's say I waited for a breakout as my confirmation because I want a little bit more confirmation. This is probably where I put my stop, because now what would happen is the stock would have to go back below the breakout and below here. And whether it goes below here and takes off again, I don't think it would do that. If it came all the way back down here, especially in a straight line, it's probably a trend reversal. That was a false breakout, impulsive down. I'm going to get, I want to lose as little as possible. That's where I know I'm wrong. I'm not afraid to have it. I'm worried about getting stopped out and having it go right back up at that point, because it's probably not. It's probably going to come down a lot further. But like I said, there's lots of different ways you can manage your trades, and I don't always manage them the same way. It can depend on the market conditions. I might be more aggressive if I'm not very confidently bullish in the market. I'll use tighter stops a lot of times, so my risk is smaller. If I'm really confident of a move and I want to give it plenty of wiggle room, I'll have a pretty wide stop. I did that with gold, and it didn't work out as well for me, but I try to give it a little bit more wiggle room on that trade. All right, so I like that one. I wanted to show you one that I didn't like, and I wanted to kind of explain why I didn't like it, because sometimes I just explain why I like it, and I'll go through some of these charts, and what I should be doing sometimes is showing you why I don't like a certain pattern, because there are little signals. You could look at this one and say, well, this one isn't it the same as that other one? It had a pullback right here. You know, why don't I like this one? It's a nice uptrend. Well, what I don't like, and this is one of those things that's, to me, it just doesn't look right, or doesn't have really the right look, is what I want to see on a pullback. I want to see on an uptrend, I want to see impulsive up, and then when it pulls back, I want to see choppy pullback like that, ABC, or just a choppy type pattern there. What I do know is very often when trends reverse, you'll get impulsive up, and then you'll get impulsive down, and then it does the opposite. You'll have corrective up, and then impulsive down, corrective up, impulsive down. So what jumped out to me right here is I see impulsive up, and then I see impulsive down. And although, well, and technically it broke this little uptrend too, not by much, but what's probably more important that is important. It broke that trend line, but also this looks more sideways right here. So you got impulsive down, and it's more sideways right here. That's really looking like it's got lower to go. It's going to be a bigger correction. Now it could just be, because this is it could just be a larger ABC pattern. That could be wave A, this choppiness right here. Maybe it even rallies up a little bit right here. It could be wave B. And then you get wave C. Maybe wave C comes right down to this breakout area. Well, yeah, if it came back down here like that, if it rallied a little bit and it came back down here like that, and then it started to move up, yeah, I'd like this again. So maybe I put this in a watch list and say, I don't like it near term, but it could just be in a little bit bigger correction right there. Now, maybe this is the correction. Maybe that is the pullback. Well, there again, you could buy a breakout. But if it comes right back up again and breaks out, you can buy the breakout, put your stop down below there. You know, so you've got other chances to get into it. It's just, I'm not saying this is a terrible stock. It's obviously been trending up pretty nice, but I don't like it right in this area right here. Too many question marks, for me at least. So that's what that's a reason why I didn't like this one, and probably a reason when I go through some of these charts I may not like it. All right, another one here in computer and technology. This is one I'm already in, the only one I'm in, but this SGML 99 strength break could be providing another entry point if you're considering. What I liked about this is overall looks like it's shifting from a downtrend into an uptrend, kind of that bowl-shaped move. You got higher low, higher high. Now, is this a higher low? I don't know. It had a little bit of a bullish engulfing pattern right there, right at this breakout area. got to hold this though, and I think my stop is down below here. So if it doesn't, I'll be stopped out of this. Could wait for a little bit more confirmation. It's a hold signal right now. You could wait for it to go back to a buy signal, something like that. But that one's looking pretty good. Aerospace, this is one that would definitely need confirmation. I brought it up a few times, and I do like it long term. It's an 85 strength rank, but Lockheed Martin, you've got, have this big consolidation right here. It dipped down, came right back up, and it's kind of consolidating. So there's a lot of indecision right now in this range. That's why I don't think I wouldn't want to buy it right here, just because the risk is that you're going to be holding on. This could do this for 2 more months, right? You're going to go sideways for. This is almost too much sideways movement. You've heard me talk about that before, where I like to see indecision, but not for that long. When it starts to drag out, it's like, why is it? What's causing it to have indecision for that long? Now, obviously, if it breaks out above here, though, it should have resolved that indecision, and then it could really take off from there. So it wouldn't hurt to wait for it to get above 490. Now, it did have a little bit of a breakout right there that didn't work out, but that if it does do that, I think this thing could really take off. So definitely one that I'd be keeping in a watch list, waiting for a good opportunity there. Business services. I like this Shift 4 payments, 95 strength rank. And had a little bit of an indecision candle today, but it broke out. It looks like it broke out, came back to retest the breakout. Now, I would have liked this to look a little bit more impulsive, like it's taken off again. It's looking a little sluggish. So this is another one where you could wait to maybe see if it can break out by the breakout, or I think this should be a hold signal, wait for it to go back to a buy signal. No, it's going to a buy signal today. I'm not a very strong candle though, so. But overall, it's still holding its trend line there. Got upper trend line right there. So it seems to be in this range. Now, maybe it's not going to hold this breakout. Maybe it comes down and retests that. If it does and starts to go back up again, you can maybe get an entry point down here. You could put a stop down below here or something. That looks like a pretty good uptrend there to keep an eye on. And then under consumer staples, I liked this UTZ down here, UTZ brands, 91 strength rank. And those of you that have been around a while know exactly where I put this one up. You get this bowl-shaped look. You have this big dip down, and it looks like it's kind of moving up the right side of the bowl. Whether you're moving up the right side of the bowl, you're kind of connecting. What you're doing is you're just connecting the lines. This low, these lows, this low. Did you ever do, when I was a kid, I used to do those dot to dot puzzle things where you draw, you connect the dots, and it would, when you got done, it would form a picture or something like that. That's what we're doing right here, is we're just connecting the lows, and it just hit each of these lows, and then when it starts moving up, and then that just visually you can see it, that it looks like you're transitioning from a downtrend into an uptrend. You start to see higher highs up through here. Doesn't guarantee that it is moving up the right side of the bowl, but you can put a stop. You're not up very far on that bowl, where you can put a stop down below here. Here's where you know you're wrong, but you could know you're wrong right here, because that would be going to a lower low. You could have a little bit of a tighter stop right there, and that's all you can control. You can't control ultimately what it does, but this is in a sector where people are going to buy this, whether that we're in a recession or not. So it's in a type of sector you'd like to be under these market conditions. And so anyway, I like that pattern. All right. Take a quick look at the S&P real quick before. A lot of times things will happen in the course of the hour. Now still we're right there. We're off the highs. One thing I'll keep an eye on today, I didn't look at this earlier, is the volume. Volume will look like it's going to be a little bit lower than it's been the last few days, but it's still higher than average. So now a lot of times when you get a big burst like that on news, that a lot of that could be just short covering. Now every bottom does start with a short covering rally. So whenever I say short covering rally, it doesn't necessarily, I don't say it necessarily to discredit the rally, to say, oh, well, this is not real buying going on. Well, it isn't usually real buying going on. It's exiting a trade. You're going to the sidelines. So it's not the type of buying that's going, that alone is not the type of buying that's going to keep the prices going higher. At some point, you're going to need new buyers that actually want to own it and have it go higher to step in and start buying. So that's why you have to be aware of that. Now, to say that this is all short covering is not accurate, because usually a pure short covering rally will be light volume, because that's all you're getting is short covering. This is a combination, because the volume is a little bit higher than average, or will be by the end of the day. It's a sign that there's both short covering and actual buying coming in. But like I said, keep an eye on that 395 area. Now, if it just barely closes above it today, I wouldn't look at that as a strong reason to be long or to be bullish. So I know I have an exact number, but don't get too caught up in that exact number. I would just say to look at tomorrow's day. Tomorrow will be a critical day. If we gap up and then can't hold that gap, and we go lower, or we close lower at the end of the day, or we close higher than the day before, it creates that black candle, but it's still lower for the day, but higher than the day before, like here, then that's going to be a very bearish signal, and probably means that we're going lower next week. All right. Have a great weekend, everyone. We'll see you on Tuesday for the market update class. Bye now.